Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the week ending March 27th, 2015. You know, we had a really interesting week. We ended it on a down note. We pretty much took out most of the gains that we made the prior week. But we've got some interesting things coming up, and I wanted to just kind of share with you my take on the market, go through a couple of key slides, and just kind of see where we're going to wrap up the first quarter of 2015. Keep in mind, Monday and Tuesday, the last couple of trading days in the first quarter, so there may be some portfolio rebalancing, and then we're going to go into Q2 of 2015. Seems like time is moving by pretty quick. What you see on my screen is the EMinis S&P 500 futures. And let's just zoom in. I've got a number of colors on this chart, or lines and shaded zones. For those of you that regularly look at my weekly update, you should recognize them. Our members to our user group certainly recommend them or see them and understand them. But let me just explain them again for you so that you can kind of just get yourself calibrated here. The first thing I want to do is talk about the horizontal lines. You can see here at the very bottom right here, this is the low for 2015, 1970.25. The high for 2015 is 21.17. The opening price for 2015 is 20.55. You can see we're sitting just below the opening. So we are underwater as we go into the end of Q1 for 2015, as we go into the end of the first quarter for the EMinis S&P 500 futures. Really interesting here. Now, we've had, and as I explained to all our members, and I'm just going to show you just over the past 4 months, but it's been like this for quite some time. You can see these bottoms here. We've had a number of V bottoms, okay? When you got all this stimulus floating around globally, and even though the Feds and Janet Yellen, who speaks, I think, in forked tongue, I don't know if any of you have ever listened to her speak, but she says things, and I just, my head bounces off the desk. I can't understand what the heck she's saying. But in any event, we've got a lot of money floating around globally, and some of that money is making its way back into the U.S., so it's kind of keeping our interest rates artificially low. But they're kind of artificially low now, as they are all over the planet. It's a race to the bottom in the currency market, which is why the dollar is so strong. So we're getting these really strong bounces. And, you know, we had it right here. We started to come up, but we couldn't take out that prior pivot high, and now we're back down again. So now the question is, you know, we're sitting right here. Is it going to do one of these bounces like this, or is it just going to roll back over, maybe test that bottom, keep coming down, test the 200 EMA? What's it going to do? So let's just kind of zoom in on this and just kind of see where we're going to go from here, or at least what I think is the most likely path for the price action. Now, the best way to look at this is you can see that in the fourth quarter of 2014, you can see this huge down move right here. It actually started back in September, October time frame, and for the entire month of October, we had this huge bottom form here, and we actually went down, took out the 200 EMA. You can see the 200 EMA right there, right? And then we just came down, and then bam, we did this again, this V bottom. I don't know what it is with these V bottoms. Normally a bottoming process is not a V bottom like that. This is not normal, folks. Even here, almost just about every bottom has been a V bottom. And you know, and we've been playing these. I mean, we take advantage of them, and we take advantage of what the price action gives us when we see these things start to form. But getting back to my point, we took out the 200 EMA here in Q4 of 2014. The last time we took out the 200 EMA was in Q4 of 2012, okay? So it's a 2-year thing. Now, we are sitting just above the 200 EMA here, which is sitting at 1999, so let's call it 2000, which is a psychological number, right? That's where we're sitting right now. Now the question is, are we going to come down and take that out, or are we just going to have a V bottom and zoom right back up again? Well, the best way to kind of get an idea of what the price action is doing, and I do this with my members, I've got all these lines on here. I highly recommend on your charts, those securities that you trade a lot, you should mark the high for the year, the low for the year, and the opening price for the year, because price tends to stop there. It tends to bog down there. You can see in 2015 is a very important number. You can see right there, right here, and then we're bogged down right here. We cannot, you know, once we go south of that number, right, then getting back north is very hard, and it takes a lot of energy. And we're now south of that number. So let me just turn this thing off here. Bear with me 1 minute. Let me just see here. So let's see here. Why is this not doing this? Okay, here we go. So anyway, we've got right now we had a double test right in this area here. We had a double test. And now the question is, or a double test of this key pivot, 2032.50, a very strong area here, a price action that we're going to test. And then I want to see us get above 2055. We need to get above 2055 to be able to continue higher. You can see the 50 EMA sitting right there. We need to be able to get above it to be able to clear this area and get back up into this little support or resistance zone right up in this area here. You can see prior pivot highs, we hung up there and we finally gave it up. So I think it's going to take a lot of energy to get us north of that area is what I believe. I think the odds favor a continued downward move. I mean, that's what the daily charts are showing. Now, if I break it down, and let's go into the 2-hour chart, because the 2-hour chart is even more, I use the 2-hour chart very often in just kind of looking at key pivots. And now here you can see this 2-hour chart really shows very nicely just how strong this 2015, 2055 opening price has been, right? I mean, it's just been very difficult. And it has a hard time getting escape velocity. If we can clear 2015, then the next area is 2065. I want to see us clear it very quickly. You can see another thing that I've got on the chart here, which is interesting. We've got this symmetrical triangle on the 120-minute chart. So you can see price action is just winding down here, and generally it releases its energy either to the upside or to the downside. And on a symmetrical triangle, guess what? It is a 50-50 call as to which way we go, up or down. So that kind of describes the market. You know, it's a 50-50 shot at where we're going. Now, I do believe that the momentum may carry us up into Monday and Tuesday, short of any major negative news coming out of the Middle East over the weekend. I think that's kind of where it's going to show itself. And if I come into a 15-minute chart, you're going to be able to see here the same area here and just where we spent all day. You can see every time today when we tried to come up and approach the 2055 area. Now this is a 15-minute chart. So the day officially kicked off, or yesterday ended right there, and then we kicked off the day. And you can see we couldn't take it out. We just couldn't take it out. And even right here, we sat right in that area there in overnight action. So I would basically, and you can see right here when I just highlight it, right? I mean, I just highlight this zone right. I'm just coloring it in. You can see we can't get up above it. We've got to be able to clear it. Otherwise, the odds, the longer we stay here, the more the odds are just going to push this price right back down, and we're going to have another test down at 2032.50. That's the way I see it. So we're probably going to get another bite at this apple on Monday. But then I think if it gives it up, we may have one of these kind of runs here where we come out, we make a run, we come back, and then bam, we break through. That would be kind of a near-term action I could anticipate up to the 2065 area. Remember, next week here in the U.S. markets is going to be a short week. Friday is Good Friday, so it's a holiday. The markets are going to be closed. Most markets are going to be closed. There'll be some futures markets open, but most of them are going to be closed. So it's going to be, most traders are going to be looking to go home on Thursday. So it's going to be one of these kind of things where it's going to be a long weekend. And I think that could add a little bit more of a bullish bias to the market at the beginning of the week and then a settling in towards the middle to end of the week. So that's a little bit about where I'm seeing the E-minis right now. So again, on the E-mini S&P 500, you can see we're below the opening price and we're below the 50 EMA. If we look at the Dow futures, same thing. You can see the blue line. We're below the blue line right there. That's the opening price of the Dow futures. You can see we came down. We made a new pivot low on Friday of last week, and then the prior pivot held, but we're still very weak. So again, if the Dow moves down and starts giving it up, then we're going to see the other markets start to give it up as well. So it's just, we're very weak. We're kind of like flip a coin whether we go up or go down, and Monday's going to be a key day for us. We're going to need to see this. Now, if we go to the small cap, which I do like, we want to see some strength in the small cap. If we look at the small cap here, you can see it's been very nice to us. We bounced off the 50 EMA. We bounced off the 50 EMA. We're well north of the opening price of 2015 for the Russell futures. And there is almost no bearish divergence from that pivot high to that pivot high. So the odds tend to favor up here, but the price is the price action is very weak. The R1 value, or the first level of resistance, is going to be 1243.60 in the Russell futures. All right, and then the downside is going to be the 50 EMA, but if that breaks, which it would very quickly, then 1203. So call it around 1200, just slightly below the opening price of 2015 for the Russell. But right now, the Russell, as I've been telling all my members, we like small and mid cap for 2015, and I still do. The other one that I like, MDY, that's the mid cap ETF for the S&P 500. We had a nice bounce here, and it moved up nicely today. It moved up about $1.25. And we bounced nice off the 50 EMA. We had this, and I was telling our members, prepare for weakness. We had that bearish divergence, and, you know, sure enough, we got it, and we came right down here, and we bounced hard. Now, the one thing that concerns me is if it starts to roll back, okay, where we have this down move, a little bit of a head fake, and then boom, we come down just like that. We take out that prior pivot, and we're sitting here. Then the odds favor another attempt and down like that, and then we've got our channel to the downside. So this is what I'm going to be watching for on Monday, and that's not to say that that is going to happen. We need to see a strong follow-through on Monday. If we don't get it and we get continued weakness, then the odds continue to favor the bears and the push of the markets down. The other thing that I wanted to show you guys is volatility. If we look at VIX, VIX actually, and it surprised me, it finished down today. Almost one full, the VIX finished down, or let's say it was down about 4.62%, so about 73 cents. And you would think with a lot of the problems going on over in the Middle East that it would have moved up a little bit more than this. So the markets right now are kind of discounting some of the issues and the action going on over in the Middle East right now. So it pulled in just a little bit, but this thing can pop at any point in time. And I would just be leery of just a little bit of a slowdown here. If we can get some more continued momentum Monday and Tuesday, then I think you're going to see more bulls come into the market. I think a lot of people did not want to hold longs going into this weekend with all the issues that are coming up with Yemen, Saudi Arabia launching airstrikes, and they're talking about doing a ground invasion along with Egypt, and you got Iran complaining. Meanwhile, we're negotiating with Iran. There's rumors that we may sign a tentative deal on Sunday, so there's going to be an effect on the energy market. So there's just a lot of stuff going on, and with all of that stuff going on, volatility came in a little bit. Because right now the markets just feel no matter what happens, Janet Yellen is just going to protect the markets. You know, and I'd said earlier, she speaks in forked tongue, and I don't mean it as a negative. I've never heard someone speak, and then at the end of the conversation, someone says, now, what did she say? And I'm going, well, she said black is black, but it can also be white, which makes it black, but then it also makes it even whiter. And like, what? I mean, I hear that, and I'm like, what the hell did she just say? So at the end of the day, folks, I guess my bottom line is you don't need to listen to these people. They're going to do what they're going to do. The best thing to do, follow the price action, and it's going to tell you their interpretation of what's going on. And we could care less what these people are saying. We just want to know where the price action is going. Right now, the markets are not concerned. That can change very quickly. So, because a good example is if we look at bonds. Bonds had a very strong update today. And you may be saying, why in the heck is bonds staying up here this high, meaning interest rates staying very low, when Janet Yellen has professed to guarantee, almost assuring the markets that they're going to at least raise the interest rates 25 basis points this year. You would think bonds would be selling off. But because we got so much stimulus going on over in Japan, China, in Europe, a lot of money's flowing into the U.S. markets. The U.S. is the only pig with lipstick right now. So money's coming in there, and it's kind of artificially suppressing our interest rates and keeping bonds up higher than normal. So, you know, we may have one of these really strange situations where the Feds actually raise interest rates by 25 basis points. That's a quarter of a point. And bonds don't move much. They might move down one or two handles and then steady themselves and start going back up again because money is coming here from other countries. So it's kind of the best of both worlds right now for the U.S. markets. But at some point, when Europe starts to get their act together and they start coming out of the muck, same thing with China, then you're going to see money being sucked out of the U.S. and you're going to see the bonds fall like crazy. Interest rates go through the roof. Okay. If we look at the euro, now the euro is just getting trashed. It's having this counter trend move like I had talked to our members about. But again, I'm expecting full well the euro is going to do one of these numbers just like that. And I think it's probably going to either hit parity or at least come down and retest that low right there. This is an Elliott wave 3. We would expect to see an Elliott wave 4. And then an Elliott wave 5 here. That's what I would expect to see. There is absolutely no divergence there. There's no bud, what we call a bullish divergence. So that means there is just a huge amount of downward pressure on this market right now. And any of this up move, some of it is buy stops being covered because it's a heavy trade. There's so many shorts in here now that any up move tends to be really quick. So what I'm recommending our members is that any rally here, we want to be sellers into that rally. We certainly don't want to be owning longs because the euro is just getting, or the ECB is just getting started with their stimulus program. And then, of course, the dollar is just the opposite. It goes just the opposite of the euro. You can see right here, the dollar is going to do one of these, what I'm expecting with the dollar is going to do one of these kind of rounded numbers. You can see that 50 EMA is going to be support, and it's going to come right back up here like that. We're going to get one of these kind of things here where the MACD crosses above the 0 line, and it's going to be steady as she goes, and let's start going back up. So for those that never played the dollar, we've been playing the dollar in and out long and having a lot of fun. If you haven't, this would be a great buy point down here when it turns. Our members, I'll let you know. But that would be a trade that I would definitely be looking at. The other one that I'm looking at that I like in the currencies, just not right now, is the British pound. You can see the pound is just riding this trend line down. You know, just writing it down. At some point, we're going to want to go bullish the pound, but the pound to some extent is kind of tied their wagon, or they're hitched to a wagon called Europe. And a lot of the exports from Britain go to Europe, and as long as Europe's in the doldrums, or ECB's in the doldrums, then so will the British pound. But eventually, that's going to start going up, and I think the pound's going to go up stronger than the euro. So we're going to watch the pound very closely. Silver, I've been bullish silver over the past couple of months, or past 3 or 4 weeks. For the past month, at least, I've been telling folks, start picking up some silver, and here we go right here. I think we're going to have a little bit of a minor pullback, right? I think it may do one of these kind of numbers, and then boom, come back up, and probably even get back up to the 18 area. I think over the next few years, I think silver, you know, we may do a lot of jagged pullbacks and things like that, but I think eventually it's going to work its way back up. That means gold will work its way back up too, but it's not going to be quite as smooth selling, I think, as silver. If we look at the gold futures, you can see gold, kind of a same pattern, but I think gold is showing a little bit more weakness than silver. And yes, there is some correlation, but not 100%. And I do believe that the gold is probably going to pull back along with silver. They're going to gather their strength a little bit and then may move higher in the future. So that's kind of where we're sitting there. One of my favorite trades right now is oil. It fell big time around 2 o'clock this afternoon. I was fortunate enough to get in on that trade. But when you look at a daily chart, we haven't really gone anywhere, quite frankly. I mean, we have stayed pretty much in this shaded zone here. We had a little bit of a down move, but we quickly got back up above it again. I think we're going to have one of these kind of patterns like that. That would be an A, B, C pattern after an Elliott wave 5 down. We got great bullish divergence here, so eventually I think oil is going to find its way higher. Now, if we got issues with Iran, Saudi Arabia, and war breaks out and Iran gets involved, then you're going to see oil come up another $5 to $10 a barrel very quickly. And the reason why is the major, I think about 10 to 15%, maybe it's 13% of the world oil goes through the canal between next to Yemen and Oman. So it's really bad, and they can get blocked and landmines put in there, and then oil tankers won't be able to deliver oil through that strait, and you'll see oil pop $10 a barrel before you can even blink your eye. It'll just gap up, and that'll be it. So, you know, outside of that, I think we're going to have more chop like that if oil is running its natural course, and then eventually we'll start working a little bit higher. The rig count that Baker Hughes puts out every Friday, again, this Friday, the rig count went down again. There's about a 6-month lag in that, so that means that probably in Q3, maybe Q4, you're going to start to see the inventory levels start to come down, and supply start to diminish a little bit, and that'll put a little bit of a bid in the oil market. So that's kind of where we are with oil. Nat gas, well, that's just down. I've been shorting the heck out of nat gas, or just doing bear call spreads up above this price. I think it's going to come down. My target is right around 2.46, 2.47 for nat gas. Gasoline, it is, you know, it's starting to move up. I think it's going to find support right around the 171 area. I'm waiting for it to kind of consolidate here and start to move back up. And then I would be long gasoline futures. So that's a little bit about where we are, folks. I went through it very quick, but I wanted to give you guys an update on the markets and my take on things. We're running our trade adjustment seminar. We got a lot of folks attending that internationally. I highly recommend it. If you haven't joined us, by all means, come on in. You can look at the recorded viewings. If you're not a member of our group, I highly recommend you come in and do that too. We're starting a portfolio, secret trader portfolio where I'm trading a $25,000 portfolio, so you can follow along with that. It's a great learning experience for you. So I highly recommend you come on in and join us. You got to be a member to be able to join that secret trader portfolio too. All right, everybody, have a really great weekend, and members, I will see you this Sunday night for our weekly market watch. Bye now.